Chinese President Xi Jinping says that China will offer another 1 billion doses of COVID-19 vaccines to African countries. He's also promised to encourage Chinese companies to invest about $10 billion in Africa over the next 3 years. The pledge of additional vaccine doses on top of the nearly 200 million that China has already supplied to the continent comes as concerns intensify over the spread of a new variant of the coronavirus virus known as Omicron, which was first identified in southern Africa. In a speech given via video link at the opening of the Forum on China-Africa Cooperation, Xi says that all China-Africa cross-border yuan center would be set up to provide African financial institutions with a credit line of $10 billion without giving further details. Xi said that China's total imports from Africa, one of its key sources of crude oil and mineral supply, will reach $300 billion in the next 3 years, adding that the two sides would cooperate in areas such as health, digital innovation, trade promotion, and green development. Well, to talk more a little about this Africa-China Summit, we're now joined by Dr Martyn Davies, who's the Managing Director, Emerging Markets and Africa at Deloitte Africa. Martyn, thanks very much indeed for joining us. Always good to talk to you.
Likewise, thanks, Peter, and thanks very much for the invitation. Much appreciated.
All right, Africa-China Summit. I mean, we've seen these summits coming fast and furious now. There was Russia-Africa, US-Africa, and I just want France-Africa as well. But China have been leading the charge for some time. And I always ask this question, but over time, I suppose it develops in terms of what it actually means. Is this a new scramble for Africa?
Yeah, Peter. It's if we take it back to the year 2000, I was a youngster then, and still am, and I was at the first China-Africa Summit in Beijing in October 2000, and attended many of the subsequent tri-annual summits. And it certainly has been, thinking back, it's been the mega trend of our generation, hasn't it? China's engagement of our continent. China has become, the last decade at least, the single largest trading partner, the largest sovereign lender to African governments, the single largest investor by many counts, and certainly the single largest financier of infrastructure. So China's engagement is clearly pervasive, and from top to bottom and east to west of the continent. As you mentioned now, there's certainly new areas of engagement. And what always amazes me is the Chinese tend to be very, the model of engagement, the strategy of engagement is continuously being updated. And that is something you cannot say, arguably, for many traditional actors. What you so rightly allude to is that maybe the unintended consequence of Beijing's re-engagement of Africa in the last 20-odd years was the reaction of traditional and emerging partners to look at Africa through a new lens, perhaps, and be equally, or at least attempt to be more assertive, to commercially assertive toward the continent, but maybe even slightly critical. Many traditional actors have yet to really amend, despite 20 years having gone by, and change their very aid-focused, non-agile policies, approaches toward the continent. And I find that quite disappointing.
So China speaks a very good language. I mean, they use words like cooperation and work together and partnership. And you hear about these big deals, these investments, and so on and so forth. But somebody might say, do you know what? Some things are just too good to be true. Should we be a little more circumspect in terms of China's intentions?
You left off a phrase win-win there, Peter, which you often hear as well, very often. Look, I think China is a rising great power, and great powers are far more assertive in terms of geopolitics and geoeconomics globally. But China is not acting any different from any other rising power, in this case, very rapidly rising power, and currently the world's second largest economy in GDP. China has become much more assertive in the last let's say 3 to 4 years or so. And I think increasingly China will be looking to protect its investments abroad, whereas traditionally many of these investments have been exposed to higher degrees of risk. Should African countries be more circumspect? Well, I think we could have been a lot more. Many African countries. This is not a continental play. This is talking now for African states, individual actors. How should African states better shape their national interest? Do they pursue interests of narrow political elite interests, or do they pursue truly national interests in the interest of economic development? That's a provocative question, and I think when it comes to China, many African countries could have done so much more in terms of aligning China's strategic interest in engaging the African continent for a multitude of reasons, and aligning that strategic engagement from Beijing with their own developmental requirements. Very few countries in our continent have actually done that successfully, I would argue. Perhaps top of the list would be Ethiopia, which is obviously facing its own challenges right now in terms of internal civil strife and conflict. But to conclude on that point, Peter, I think that there's two stories of ChinaAfrica. But one is the supply side of capital, which we all talk about, big ticket investment items or financing items, typically into infrastructure. That's the supply side. The demand side is a commodity story. And China's incredibly resource-intensive growth model, because of infrastructure investment, gross fixed capital formation spend in China, the urbanization story, of course, has underpinned all commodity driven economies over the course of the last 20 years, whether they are in Latin America, whether they're in Australia, for example, or whether they're in Central Southern Africa. And that has provided a tailwind to African growth. So China's growth trajectory, arguably, certainly, there's definite causation there in underpinning Africa's own growth narrative over the course of the last generation.
So is it China securing supply of our minerals and our resources by building the odd stadium, helping with the odd road, but on top of that you then have cheaper debt. But the moment you owe somebody, you owe someone.
Correct. One needs to build political goodwill, of course, to be able to secure resource assets in many political economies in Africa or elsewhere. I think to an extent, there has been certainly country plays from Beijing. Think Angola, think Angola sort of Exhibit A, think the DRC Congo, where undoubtedly there's strategic interest to secure critical minerals or oil supplies. And there's nothing wrong with a country pursuing national interest. It should pursue national interest. A country using its resources, financial resources, is to pursue national interest abroad, particularly from an geoeconomic perspective, is merely using taxpayers' money in an effective strategic fashion, is it not? The question is, how do African countries respond to this? Are the fruits from China's engagement best leveraged for developmental outcomes to the vast majority of the citizens in that country? Or are they siphoned off for narrow, rent-seeking political interests? We need to see more of the former rather than the latter.
And I suppose also the African nations prefer China because China will never interfere in domestic affairs. Whereas America might say, Ethiopia, if you don't behave, we are withdrawing our support. Sudan, if you don't behave, we're not going to help you. China's not that kind of country.
Are there principles in Chinese foreign policy or Chinese foreign commercial policy? I think there's not as you set out, if that's the case, then the principles will be very different. It will be far more of a pragmatic engagement over arguably a principled one. And one must also understand the political economy of decision-making of how capital is deployed through so-called policy banks, i.e. strategic lending banks. That would be China Export-Import Bank, and what you mentioned earlier, Xi Jinping making certain allowances for trade finance would certainly support the export of Chinese goods and products abroad. And secondly, China Development Bank, which has certainly been investing and financing African infrastructure. The way capital is deployed in a sovereign fashion allows it to have and sovereign finance, whether it's from Brazil, whether it's from Saudi, whether it's from China, does behave differently from private capital. It has a higher tolerance for risk, arguably. And I think in China's case, I would certainly argue that many of the investments financed, or the infrastructure projects financed by the Chinese in Africa, that's a primary characteristic, a high tolerance for risk, for better, for worse. But again, are these projects sustainable, i.e., can they finance themselves going forward? And I think there's a very big question mark on many of these projects. But ultimately, what we want to see, all of us, whether the Chinese or African recipients, we need to see these projects to be sustainable, i.e., self-financing in many cases, ultimately bankable being the sort of more common phrase, and economic enabling. Many will be, many are. The prime example right now, for many reasons, is the Addis Ababa to Djibouti railway line, which is supporting the imports and exports of the Ethiopian economy, even during the civil war. There's many other projects, arguably, that would be considered white elephants. So it's been a bit of a hit and miss in my observations over the course of the last 20 years.
Do you expect any game-changing moves out of this particular summit?
China's about continuity, not dramatic change. And that talks to domestic policy as well as this foreign policy. It's incremental change. We have seen a drop-off in China's investment into Africa in recent times as a consequence of different leadership post-2013 in China itself. It's a consequence of obviously COVID. I mean, no one's traveling, are they? It's hard to deploy capital when you're not actually sort of, visiting the asset, meeting with owners of the asset, etc. And also as a consequence of China's own rebalancing away from an economy that has been predominantly infrastructure driven to one which is more services driven, arguably, and Chinese capital will start to behave in a different fashion. The one thing we need to fully take cognizance of, I think is a very important point, is Chinese investment abroad globally is predominantly driven by Chinese private money going out, with the exception of resources sector particularly. Almost all of China's investment into Africa comes from state-owned enterprises. Therefore, it's geopolitically underpinned. We can truly say that African economies have been successful in really tapping into the China opportunity when we start to attract truly Chinese private investment into the continent, rather than just this, politically directed money that we've been receiving for over 20 years.
One of the gambles that China does make is that it doesn't interfere in the internal affairs of a country. However, at some point, you have to take a stand, because if you go into a country and the ruling regime is a regime, it's not going to be in power forever. What then happens when that regime is removed to the China-country relationship?
Well, that's official rhetoric is yes, we as Chinese would not interfere or seek to influence domestic events. I'll give you two exceptions to that. I think firstly is the Chinese government played an extremely constructive role in ending conflict in Sudan, South Sudan, rewinding 10 years, 11 years, and was really a broker and played a pivotal role in conflict resolution in the Greater Sudan prior to 2011, when South Sudan became independent. So was that interfering in domestic affairs? It was playing a very constructive role. I think secondly, now you may see this, and this is not happening, but it may see it in a country like Ethiopia, where China has significant amounts of capital to lose. We've seen it in other countries in the region, be it Zimbabwe, maybe others in the region, which have had significant levels of political mismanagement. Why should a foreign investor with so much skin in the game, so much capital skin in the game, be it equity or loan finance in a particular country, stand by and potentially lose so much money, billions of dollars, in the face of bad governance? Why should that happen? Whether it's American money, whether it's European money, whether it's South African money, or whether it's Chinese money. So I think that we shouldn't be too this notion of, well, China does not interfere. I think that interfere is perhaps the wrong word to use, but China should certainly seek to, like any actor, should seek to involve itself to protect its interests, and there's nothing wrong with that.
Martyn Davies, always a pleasure talking to you. Thank you so much indeed for joining us.
Thank you, Peter. Have a good evening.